Are you feeling overwhelmed by taxes, uncertain about your business finances, or worried about protecting what you already have built? Well, you're not alone, and there's a better way. I'm Ashley Freeman. I'm a tax and asset protection attorney, and this is Tax and Money Mastery, where faith meets financial wisdom. Each week, I'll show you how to legally reduce your taxes, manage your money with clarity, and protect your business and personal assets so that you can focus on what truly matters most: God, family, and career. Proverbs 10:22 says, "The blessing of the Lord makes one rich. He adds no sorrow." So grab your coffee and settle in. This is a podcast you can't afford to miss. Well, welcome to Tax and Money Mastery. My name's Ashley Freeman. I'm your host. I'm a tax and asset protection attorney. And disclaimer, while I am a tax and asset protection attorney, I'm not necessarily your tax and asset protection attorney. So this information is for educational purposes only. If you hear anything in this that you think may work for you, please contact your own professional advisor. And let's jump right in. Today is donor advised funds and charitable giving. So charitable giving is one of those things that at the end of the year, you can still make a big impact. As a matter of fact, you can donate up to 60% of your adjusted gross income to charities. That will reduce your income dollar for dollar. So if you have an income of $100,000, you can donate to a charity up to $60,000, and your taxable income that's left will only be $40,000. Did I do that math right? Yeah. So I always ask that because I always have to ask myself, did I do the math right? Because I am not a CPA. I'm a tax attorney. There is a big difference. Anyway, that will lower your taxable income. Pretty much everybody knows about 501c3s. You can give to your local church or to basically any charity that has the 501c3. There are also other designations other than 501c3s that are charitable. The 60% limit may not apply to them, though, so there are some that are a little bit different. Just keep that in mind and make sure you check that out with your advisor if you're counting on it to be a certain percentage that you're giving. Donor-advised funds are another way of giving. A donor-advised fund is considered a nonprofit, a 501c3, and there are many places that have donor-advised funds available, or you can start your own. It used to be like $5,000 with a place called renaissancecharitable.org. They are out of Indianapolis, Indiana, and I actually went and spent a couple of days there learning about donor-advised funds before I started a donor-advised fund program at the broker-dealer that I worked for. So I know quite a bit about them. And Renaissance is one of the largest, if not the largest, in the United States for donor-advised funds. So what a donor-advised fund is, everybody kind of pools their money into this one fund. Then there's an investment advisor that pretty much runs the fund. You can tell them that you want this money that you just donated, you want to put it into this stock, this bond, this mutual fund. So you can actually invest that money and still have a little bit of control over it. Then you can also tell the fund when and where you want to distribute the money. You can distribute just the earnings if you want, or you can distribute earnings plus principal. If you just do the earnings every year, that fund could go on and on and on forever, potentially, as long as the principal remains intact. You can donate not only money, but just about any kind of asset you have. Renaissance will take it. At least the last I knew of, they would take it. You could donate airplanes, boats, cars, stocks, bonds, basically anything of value, any kind of asset that you have, you can donate. You can donate it just like it is. They will do an appraisal I think they do the appraisal for you. And then what they do is they sell it and put the money into the fund, and then the money can start making more money. You will help choose the stocks and bonds and things like that it's going to be invested in. Then you have control as well by you can tell it where you want the funds dispersed. It could be 20 years down the road. It could be, I don't want any of these funds to leave the fund until after I'm dead, and then I want all of it to go to the Red Cross. Or I want 50% to go to the Red Cross, and I want 50% to go to XYZ nonprofit. You could also make your children or your grandchildren the trustee, so to speak, that they're the ones who tell the fund when and where to put the money. But that's the cool thing about it, is you can grow this money. You can leave it in. You can just dispense how much you want. But you get the deduction that year. You may also be in the process of starting a nonprofit of your own, and you don't have it quite set up yet, and you want to be able to put the money into that. You could put it into the donor advised fund, and then when you get your 401 or 501k approval, then you can move it from that donor advised fund into your own charity that you started. Now, the charity that you start is not it's not technically owned by you. 501c3s aren't owned by anybody. They're owned by the public, it's considered. So that's a little bit about donor advised funds. If you want more information, you may even have a financial advisor, and the company that they work for may have a donor advised fund of their own. Or like I said, you can start your own. It used to be like $5,000 to start your own. Or you could go together with some family members to start your own donor advised fund. I will put a link in the show notes below for renaissancecharitable.org. They are wonderful to work with. I'll also put their phone number in there. And that's about all I've got today. So I hope you're having a wonderful day. I hope this podcast blessed you in some way. If it did, please feel free to share it with someone else that it might help. Thanks, and I'll see you next time.